Hello YouTube, welcome to Trade Journal episode 10, Road to 1 million. It's going to happen. Now you can see it is a red day today, unlike yesterday. I did have a green day, but I gave back the profits and some from yesterday, which tends to happen. That's okay. So let's go ahead and go over the trades. As you can see, I am down 6% today. So at 7:22 a.m., I did buy two same day expiration 586 calls for $14 total, $7 premium per contract. Sold the first one for 30%, sold the second one for 100%. I take that back. The price was at 100%. The bid ask made me sell at 13 cents, so near 100%. So that was the first trade that I took for today. I will be honest, that was not my trade. That was somewhere around here, by the way. That was not my trade. That was Daffy's trade from the Bueller Buys Discord trading group. By the way, shout out Bueller, shout out Daffy, shout out Leland, and everybody else, whoever I'm missing, shout out to all of you guys. So I went ahead, I took those trades, and then the rest of the trades were on me. So let's see. So I bought a put at 109. This contract was at 7:55 a.m. So go ahead and look over at 7:55 a.m. right around here. So I did buy a put 7:55 a.m. Okay, somewhere around this area. And price was coming up. And it broke my levels. I don't know where the levels are at anymore, but I went ahead and I closed that trade, bought a call. I bought the call first, and then I sold the put. And I bought the call at 7:57, so it was not long after price. I was expecting the price to go down in my favor quickly. So because it didn't, that's when I went ahead and I reversed the trade. So yeah, it lost about 20-ish dollars. Not 20, like 10 on that contract, a little more than 10, 12. And then I was in this call here, and for this call, I doubled down on it, but unfortunately at the wrong time, so 8:07 is when I doubled down. So we can look over here. So somewhere around here I doubled down, I believe. So yeah, and what I meant to do was I meant to double down here, and then exit my contract here. But I did not get my fill, and then I kind of chased. I should not have chased because then price did not go in my favor. It came down. I sold at 808, which is down here, which would have been a very nice area to actually double down or increase my contract count because I did have this trend line before then. I put this trend line around this area actually, or maybe even before then. But I do remember putting in this trend line really early, and I do remember that price bounced off of this trend line level. Unfortunately, I was not able to hold, and then I got a little more aggressive. I bought a spike call at 9:18 in the morning. So we look at 9:18. Right around here. Right around here when it broke this level is when I bought. So as you can see, I'm not very systematic with the way I was trading today. I was being overly aggressive. I had all these levels in place. Yeah, I had all these levels in place. I did not trade it well. We took loss after loss after loss. And yeah, we don't even have to go past that. You can see about many contracts. I was trying to increase or I was trying to essentially revenge trading by using a martingale strategy, but it wasn't working well. Luckily, I was not holding any contracts. I was in bag holding. I was closing contracts the moment they weren't going in my favor. As you can see, the more expensive contract here, the more expensive contracts, about 3 of these, I was doubling down. So not bag hold. I just went ahead and I closed them, and then I tried one more time. I ended up buying 5 contracts here, and came down, and I cut my losses. So not good. I knew it was a ranging day for the most part. I mean, it's more of in the early portion of the day, it started ranging. Once it broke above this level, I should have taken a look at it, kept looking at it, and waited for it to retest this trend line before buying long calls again. But I think I stopped because I did have a plan to trade AMD earnings. Okay, so this is looking good for me right now. The reason for this is because I am currently in a Strangle, AMD long Strangle expiration the end of this week, November 1st. And I was expecting price to move up, even though I did see prices just been going way up all day. I did expect price to continue up, just because I don't know if there's any correlation here, but Tesla shot up after earnings like a bunch. Let's see, we can just go from here. So earnings happened, price shot up, and then there was a kicker candlestick, continued up. So I'm kind of expecting that a lot of the companies, tech-ish companies, were gonna continue doing the same. But it did not. Price came down. Luckily, I did not buy calls. Only I bought puts as well. So bought a 150 put, a 180 call, a 135 put, and a 225 call. So I wasn't going to purchase these the cheaper ones, but they increases the risk a little bit, but exponentially increases the profitability of the strategy. So as you can see, if this were the straddle with just 2 contracts, just the closer at the money ones. I'm so sorry if you hear those dogs. I'm gonna go ahead and close the door. Apologize about that. I'm so used to it that you guys probably don't. I mean, I don't hear it. You guys probably do hear it and are getting annoyed by it. So yeah, so here's how the contract or the strategy would be playing out if I only had those 2 contracts. Price has come down to currently at 154.28. Okay, so let's just say price up until open stayed at that level, 154-ish. 154.28, yeah. I'd be up 3%, 3.31%. So not a lot, I think. Let's see. Yeah, $12. Not a lot, not a good amount. Yeah, I'd be in profit, it'd be great. Well, this is actually, no, I'd be up more than this. It'd be a little more closer, like $80-ish, because this is price of the contracts at expiration, and I'm not planning to hold on to the contracts to expiration. I'm planning to either close or use the trailing stop loss at the beginning of market open. But let's go ahead and look over at the 4-legged strategy that we're in. So at 154, it goes from $12 profit to, and that's at close again. Let's see, it doesn't show it here. Let's see if we can tighten the price range here. I said at 1, no, it's not, still not doing it. Let's tighten it even more. So at 1, it's still not showing. Bear with me here. Yeah, so at 154 goes from $12 to $29. So I just barely increase the risk and increase the profit potential a lot more. Let's just say price goes down to 150, right? So this is the 4-leg strategy. I'd be at 219 at close profit versus at 150 2-leg strategy to be 165. So you can see it's plenty more. It's about 60-ish, $64 more profit for only risking about 30-ish more dollars. So it's definitely worth it. That's the strategy I'm in. Luckily, AMD is coming down. I'm just hoping that AMD does not stay at close or near today's close whatsoever. That's just not the way this strategy is supposed to work out for me. But that is it for today. One more thing I do want to say is when price ranges like this, and I'm losing in these trades, and you can see it's really ranging. It's been ranging for days. That's okay. It's a positive thing. You want to look at that as price consolidation. You can just see there's a squeeze. Price is starting to squeeze, and eventually it will be breakout one direction. And once price breaks out in direction. I do expect like a trend to continue for about 3 days. If not, the least 2 days, and it's going to be a very strong move, and I'll have conviction to want to enter that side of the trade and just hold on to my contracts. So thanks for watching Trade Journal episode 10, Road to 1 million. I'll see you guys in the next one. Oh, and by the way, for the trading document outline, let's just go ahead and forget about that for now. I will bring it up in a future video as a surprise. I essentially need to do an overhaul on it, and I'm not looking forward to sharing it with you guys in the state that it's in right now. All right, catch you guys. Peace.